Welcome to This Explainer. Today, we're unpacking the highly effective and, frankly, deeply ruthless strategies John D. Rockefeller used to build the greatest monopoly in American history. We're going to examine exactly how a boy from a pretty chaotic household engineered an empire so incredibly vast, the government literally had to step in and break it apart. Okay, let's dive into this. Just listen to this quote from Rockefeller. "I have ways of making money that you know nothing of." I mean, that perfectly encapsulates the cold, calculating tone of his entire life, right? From his absolute earliest days, Rockefeller operated with a mindset that was just entirely different from his peers. He wasn't looking to just participate in markets, he was looking to dominate the very mechanics of how money was made. He was always remaining steps ahead of everyone else in the room. Section 1. The Discipline of Capital. To really understand the tycoon, we have to look at his origins back in 1839. Rockefeller was born into a world of extreme contrasts. On one hand, you had his father, William Devil Bill Rockefeller. He was a traveling con man who sold fake cancer cures and openly boasted about cheating his own sons just to make them sharp. But on the flip side was his mother, Eliza. She was a devout Baptist who ruled the home with iron piety and this ruthless thrift, demanding that every single penny be accounted for. And that chaotic upbringing, well, it forged an incredibly serious boy. Just think about the number $3.50. This wasn't just pocket change for a kid, it represented a profound awakening. At just 12 years old, young John lent $50 he had saved up to a neighboring farmer at 7% interest. When that money came back, it carried an exact profit of $3.50. For Rockefeller, this was an absolute revelation. It ignited a lifelong obsession. He realized right then and there, he didn't just have to work for money, he could make capital work for him. And this discipline of capital scaled up rapidly. By the time the American Civil War broke out, he was running a produce commission house. The profit growth was explosive, going from $4,400 in their first year to $17,000 in the second. Now, while his brother enlisted, Rockefeller actually paid a substitute to take his place in the Union Army. He didn't view the Civil War as a moral crusade at all. He saw it as a pure market opportunity. He shipped massive food supplies to the front lines, methodically tracking every single transaction, essentially turning the absolute chaos of war into a calculated engine for massive profit. Section 2. Taming the Oil Chaos. By 1859, the Pennsylvania oil rush had exploded into this mad gold rush. Speculators were flooding the region, boom towns were springing up overnight, and prices were swinging wildly. We're talking from $20 a barrel all the way down to mere pennies. While thousands of wildcatters gambled everything on drilling, which was just this wasteful, unpredictable, destructive gambler's game, Rockefeller focused on the other side of the equation, and this brilliantly illustrates his genius. He thought that the real power lay not in striking oil, but in refining it. Refining was the bottleneck. It took raw chaos and turned it into a uniform, reliable product, kerosene. He knew, without a doubt, that whoever controlled the processing would inevitably control the entire industry. Section 3. The Cleveland Massacre. Let's fast forward to the early 1870s. The oil market was an absolute bloodbath. Overproduction caused prices to totally collapse, and refiners were just fighting over scraps. Now, Rockefeller knew his refinery was incredibly efficient, but this volatile competition threatened the whole operation. He needed an edge, a permanent, unbreakable advantage, and that edge came in the form of a secret deal called the South Improvement Company. The mechanics of this are wild. Standard Oil received huge secret discounts on shipping. But it gets even more predatory than that. The independent refiners not only paid full price, but the railroads actually took a portion of those higher fees and paid them directly to Standard Oil. So every single time a rival shipped a barrel of oil, they were literally subsidizing Rockefeller. But it is absolutely crucial to understand his mindset here. Rockefeller genuinely viewed this predatory consolidation as righteous order. He believed market chaos wasted resources, and in his mind, monopoly meant maximum efficiency. So the crucial point is how quickly weaponized this became in what's known as the Cleveland Massacre. In just 6 weeks, the squeeze was on. Week 1, competitors were slammed with those inflated shipping costs. By week 3, they were failing. And by week 6, Rockefeller approached them as they faced total ruin, offering cheap cash or Standard Oil stock. Terrified, most of them sold. In a month and a half, he absorbed 22 of the 26 rival refiners in Cleveland. The sheer scale of what he achieved is just staggering. By the late 1870s, Standard Oil secured a 90% share of American oil refining. He had established a near-total monopoly, maintaining an iron grip on the kerosene that was lighting practically every single home in the nation.
Section 4, Slaying the Octopus.
Of course, such immense, unchecked power inevitably creates powerful enemies. Enter Ida Tarbell. She was a journalist from Titusville, Pennsylvania, whose own father was an independent refiner completely destroyed by Rockefeller's secret railroad rebates. She spent years watching him live in bitter debt. And fueled by that destruction, she published a meticulous, devastating 19-installment exposé called The History of the Standard Oil Company. Tarbell completely stripped away Rockefeller's moral veneer of efficiency. She exposed the secret deals, the predatory pricing, the relentless coercion. Her journalism totally shifted the public narrative overnight. Suddenly, people didn't view Standard Oil as a symbol of industrial progress anymore. They saw it as a strangling octopus with its tentacles wrapped around the entire country.
Well, the public outrage finally reached a boiling point, giving the federal government the momentum it desperately needed to act. They utilized the Sherman Antitrust Act of 1890, and the Justice Department sued Standard Oil, presenting years of evidence of their coercive tactics. The case dragged on, but government pressure was mounting incredibly fast, culminating in a historic showdown at the Supreme Court.
In May 1911, the Supreme Court ruled unanimously Standard Oil was an illegal monopoly and had to be dissolved. The massive trust was shattered into 34 separate entities. You might actually recognize some of the biggest pieces: Standard of New Jersey, Standard of New York, Standard of California, companies that would eventually become Exxon, Mobil, and Chevron. Now, this breakup was meant to be the government's ultimate punishment.
Now, what's really interesting about this is the ultimate unintended irony of that punishment. Because Rockefeller held shares in all those newly formed, leaner, highly focused companies, their individual stock values absolutely soared on the open market. This breakup, which again was meant to slay the monopoly, actually tripled his net worth overnight. By 1913, it pushed him over the billion-dollar threshold, making John D. Rockefeller the world's first billionaire.
Section 5. Securing the Dynasty. So with unimaginable wealth secured, the monumental task of protecting it fell to his only surviving son, John D. Rockefeller Jr. Jr. felt the heavy stain of his family's reputation and basically made it his life's mission to sanitize the public image and shield this vast fortune from both ruin and taxes. But Jr. was immediately tested by tragedy. In 1913, at a family-owned coal mine in Colorado, a strike turned violently deadly. It became known as the Ludlow Massacre, where 21 people, including women and children, died. Branded a murderer by the press, Jr. took a wildly different approach than his father ever would have. He essentially invented modern corporate crisis management. He hired PR experts, he personally visited the striking miners, and he implemented the Rockefeller Plan for employee relations. Later, during the absolute darkest days of the Great Depression, he poured $250 million into building Rockefeller Center, which created massive employment. Through highly strategic, massive-scale philanthropy, he began transforming the family name from ruthless villains to enlightened stewards.
Let's move to and see how this builds into the future, because Jr. didn't just protect the reputation. Think about the brilliant financial architecture he built to legally shield the money itself. Starting in 1934, he established irrevocable trusts. By utilizing generation-skipping structures, they legally avoided the massive 40% federal estate tax upon every single death. They hired professional managers to invest the money conservatively, ensuring that the principal always grew while safely distributing $50 to $100 million annually to the heirs. And because of this brilliant legal system, a fortune built way back in the 19th century has avoided all the typical family squabbles and has actually grown to an estimated $10 billion today, spread out across more than 200 descendants.
Which brings us to the ultimate paradox of this dynasty. Today, the Rockefeller Foundations fund massive, incredible global progress in health, education, and the environment. But we can't forget that progress is entirely fueled by a fortune forged through ruthless coercion and monopolistic destruction. It leaves us with this fascinating historical tension. Can strategic philanthropy and perpetual trusts truly wash away the sins of a monopoly's ruthless rise? It's a remarkable duality of power and legacy to think about. Thanks for joining me for this explainer, and I'll see you on the next one.